All right, good evening, everyone. I super celebrate every one of us. If you're watching this video, it means you're part of the Forex free class, and so far we've done quite a number of study, and we're moving into the practical aspect of what we've been doing. We'll be going into the technicalities of Forex trading. We'll be going into the technicalities of forex trading now. I would like you to watch this video with a pen and a jotter. I'd like you to watch this video with a pen and a jotter. Watch it over and over and over again. So I'll be starting what I have to say this evening. First of all, I want you to understand something about the forex market. The forex market is, like you all have been introduced, is actually a place where we buy and sell currencies. Now you might be looking at this dark screen you're looking at, and you'll be wondering what it is. These are things you'll be getting familiar with as time goes. These are things you'll be getting familiar with as time goes. So the forex market is actually a place where we buy and sell currencies. Like if you see before you, you are going to see British pound, United States dollar, that is GBP USD. That is the currency that is placed on my screen right now. And before we buy and sell currencies in the forex market, we always analyze the currencies. Now, how do we buy and sell currencies? You want to understand, how do we buy and sell currencies? In the forex market, we buy currencies when they are low and we sell them when they are high. Just like any business, you want to always buy when the price is low and sell when the price is high to make profits. That is how it also works in the forex markets. You buy currencies when they are low and you sell it when they are high. Now, in the case of British pound against the United States dollar, US dollar, which currency are you buying for which? Now, whenever you see a currency like this, GBP USD, British pound, United States dollar, what it means is you're buying the British pound with this currency. You're using United States dollar to buy the British pound. You're using the United States dollar to buy the British pound. So what it means is the British pound is low in price, so you are buying it after doing your analysis in the market, being sure that the British pound is going to appreciate in value, is going to gain value in the market. So you will buy the British pound when it's low and you are using the United States dollar, because the way the forex market works is all currencies come in pair. We've told you that currencies always come in pair. You can't see one currency standing on its own. So if currencies are in pair, one must be weaker than the other. That is why you can buy one and sell the other. One must be weaker than the other. That is how the forex market works. So if you are buying if you are buying the Great Britain pound, which is the British pound, and you're using the US dollar to buy it, what it means is the Great British pound is poor, is low, and you are after doing your analysis, you're looking at the Great British pound gaining value over a particular period of time. Then when it gains value, now the way we make profit in forex is when we buy a currency. Like if you look at this chart here, this is where you have different exchange rates. What it means is you have to give $1.3, $1.33 at this price, at this level here. If the market was here, what does it mean for the market to be here? Now this is a chart that tells you where the British pound is. If the British pound is here, trace it to the left, it will tell you how many dollars you need to give in exchange to get one British pound. If the British dollar is here, it is at this point, trace it to the left, to the right, it will tell you how many dollars you need to give to get one British pound. So this is like a calibration telling you the value of the British pound in respect to dollar, telling you how many dollar you need to give to get the British pound. So what we do in the forex market is, like in this case, you can see the British pound at this point, at this low point. Let me draw a line there so you see what I'm saying. The line here, at this point here, at this point here, come please. All right, let me make the line red and thicker so you can see it clearer. All right, I need it red. All right, if he's not responding, no wahala. I'm coming. Good. So now let me leave this other line. Let me leave this other line. Now at this point here, you can see this candle. This is what we call candles, and this is what we'll be looking at. But then I want to give you a general understanding of what you're seeing in my front before I can go into teaching you candle. At this point here, this candle, each of these candles represent various prices that the Great Britain pound was in the market, various value that the Great Britain's pound was in the market. So at this point here, the Great Britain's pound, at this line here, you can see that there's a tiny tail that touched this line here. At this point here, the Great British pound was, for you to get the Great British pound, you need to give $1.33. For you to get the Great British pound, you need to give $1.33. Now, these are the kind of points we want to buy from. When we buy, because at this point it is cheap, when we buy from this point, you can see how the Great British pound just kept on gaining value against the United States dollar. At this point, it was just standing almost at the same level. You see how it's gained value, it gained value up to this point. Look at where it gained value to. Look at the height it gained value to. So you might imagine you bought it when it was $1.33, and see how it rose. It rose up to as high as $1.34 before it started dropping again in value. Now, whenever you are trading forex, if you are good enough to analyze the market and know that, okay, the Great British pound will start gaining value from this point based on your analysis, and you bought the Great British pound, you buy it, the more the Great British pound gains value, the more money you make. That is how we make money in the forex market. The more the Great British pound gains value, the more money you make. And if at this point, let's say you came into the market at this point and you say, oh, the Great British pound had gained too much value, from my analysis, I see the Great British pound losing value. I see the Great British pound losing value. What you do is, whenever you buy an item and you notice that the item will be losing value, what do? You sell the item before it loses its value completely. So what you do at this point is you sell the Great British pound. When you're selling the Great British pound, you will make money as it is dropping. You can see how the Great British pound dropped from